Welcome to Quantum Finance. My name is Parker. I'm the head trader here, but I am not a financial advisor and this is not financial advice. So, in today's video, we'll take a look at the economic data that came out. We'll look at the 2024 budget proposal that was released that did cause a lot of pain today in the stock market. We'll look at the overall market, then we'll turn to the trading opportunities, and then we'll wrap up the video with what we have coming up tomorrow. So today we had the US initial jobless claims come in worse than expected. And we also had the budget of the United States government come out for the 2024 fiscal year. So we'll take a look at what we had here. So the Biden is proposing a $6.8 trillion budget, which would add a 1.8 trillion to next year's deficit. Here are a quick summary of the Biden tax changes he would like. So he wants to basically double capital gains tax from 20% to 39.6%. He wants to raise the top tax bracket tax from 37 to 39.6%. Corporate tax raised from 21% to 28%. Self-employment tax raised from 3.8 to 5%. He wants to increase the IRS funding by an additional 15%. 25% minimum tax on households with 100 million plus net worth. He wants to eliminate tax breaks for crypto. He wants the elimination of carried interest tax break. And he wants to increase the stock buyback tax from 1% to 4%. And obviously this is pretty disgusting, so you can see why the market got hit pretty hard today. So yeah, now we'll look at the charts, starting here in the debt market with the 10-year yield. As you can see, pretty big red day coming back into this midline here on the daily, pulling into the level that has wicked off of the past couple days. The dollar, red day on the dollar, coming back after not getting rejected yesterday off this 105 level, not able to push through that resistance. S&P 500, as you can see, the massive red day we got here from that budget proposal. Coming up at the beginning of the day, wicking off that midline, and then just getting rejected all the way down to the lower extreme, breaking through last week's lows. And you can see here on the weekly, these bands are coming up, so this range is getting tighter and tighter. Bitcoin, as you can see, big red day on Bitcoin, currently down 6.6%, breaking through last week's lows as well. Or this is a couple weeks ago. This previous structured low right here, coming in, actually breaking down through this level here. So, I mean, you could see a lot of weakness in the overall market today. I'd say the next area, since it is breaking down through here, would probably be down into this range. As you can see, breaking through the midline on the weekly chart. XRP just getting massively rejected too off of the top of that upper range. Big wick on the weekly candle. Well, now we'll look at commodities. Oil, continue weakness in oil, third red day in a row, breaking through yesterday's lows in that midline, coming down to retest the lower extremes. Gold, green day on gold after getting basically a double bottom down here at the lower band and this previous support, coming back up to retest the mid line here. This range is getting much tighter here on gold. Silver, not much to say about silver today. Slightly green, just kind of sitting down here at the lower end of this range, still bearish on the monthly chart. So now we'll look at some trades today. I mean, we'll start with the S&P 500, do an analysis on it. As you can see, just massive red day, just basically just straight down. Obviously no real consolidation at all, opportunity for shorts. We didn't really get any squeezes here. We'll zoom out some more. And we'll start down here on the 15-minute chart. I know if y'all remember Monday, we had the gap up, the push up, the double top, and then the sell-off. Extremely similar price action day with the gap up, push up, double top, and then just massive sell-off. as you can see here on the 2 hour, getting through the 200-day and 100-day, which they pretty much are the exact same spot. As you can see, the 100-day and the 200-day are stacked right on top of each other, which is extremely interesting, with the 100-day moving average moving slightly above the 200-day. And if you watch yesterday's recap, you did see me talking about this 30-minute squeeze that was going on here. I did note that the moving averages were bearish. Obviously, we were expecting some type of volatility event. Obviously, not something this extreme, though, because as you can see, price pushing through the lower bands on the 30-minute. On the 1 hour, it's still below the standard deviations, and on the 2 hour, it is still below the standard deviations. So an extreme move here, getting through all the bands. I would expect price to make its way back up inside the bands, but we'll see what happens here. We'll zoom out some more to the daily, weekly. I know we just looked at it, but as you can see, the band coming down to the lower band here on the daily, breaking through the midline. And I do want to note how bearish this monthly does look. We are kind of getting rejected here at these moving averages right here in the middle of this range. And like I did note earlier, these bands here on the weekly are getting quite tight. So I do think there is going to be some big market move coming up soon. I mean, looking at the monthly, it's definitely looking bearish at the moment. But what do I know? I'm just some random guy on the internet, so we'll have to see what happens. We'll go to the scanners now. Actually, I do want to show you something here on the 15-minute. Remember how Monday we didn't really have any good trades with this price action, and today was another one of those days. It was very similar price action. So with our strategy, we try to capitalize on compressions, right? Volatility squeezes, continuation. But this kind of price action is just one directional and then massive reversal to the other side. There's not really any good squeezes or continuation. It's just massive reversals, extreme volatility. So yeah, that's kind of the story today. There wasn't really that many good trades. I mean, you can see here on the scanner we have OSHA. It had a squeeze here, which made it to the upside, but it was below the open, so it's typically not ideal to get long on small caps while they are red. So, you know, not a good trade today. I can just scan through here, and as you can see, I mean, just up, down, not really any squeezes or continuation to note. I mean, just choppy, terrible, or not really even that choppy, just extremely volatile day. But if you were looking at the scanners this morning, you did see PayPal here up towards the top. And, you know, before we had the massive volatility event to the downside, we did have a couple squeezes setting up. And I do want to go over this squeeze here. I think it's a good example of, you know, risk management and stop losses. So I do want to go over it. And so you can see how, you know, this isn't a perfect strategy, right? There's no 100% perfect strategy. All you can do is manage risk as best as you can. So I do want to kind of go over this trade today, or this squeeze setup that was happening, because if you were scanning the market here around midday, you would have seen this as the best setup for the squeeze. So as you can see here, I mean, the chart looks distorted due to this massive sell-off, but we had the squeeze come up, or we had the push up, we had the pullback, we had the consolidation, we had the squeeze with momentum reversal to the upside. As you can see here too, we were holding support right here on top of this pre-market high. We did have this 100-day acting as resistance, so there was a risk that it would get rejected off of this. But I will zoom out here to the 15 minutes so you can see we were getting the trade line coming in here for a trade line VWAP cross, but it never actually crossed because we had the massive sell-off in the overall market. We could look at the daily here. I mean, it had room up to this upper band. And this is something to watch, you know, PayPal coming up over the next couple of weeks, months potentially, because, I mean, you can see this massive come down, and it is consolidating, getting a pretty tight squeeze here. So this could be something to add to a watch list for some type of move in the future. But so I want to go over this trade. So we actually were looking at the call options on this. I mean, obviously today was not the best day to trade with the type of volatility and catalyst we had in the news today. But if you were going to trade a squeeze, this was the best squeeze to trade based off the overall chart analysis. So yeah, you had it sitting here consolidating really tight squeeze between the 100-day and this. You had the 15-minute trade line coming up. So if you were looking at to get long in here, say somewhere in here, these contracts, we'll call it at the midline, about 115. So we did start getting the squeeze to the upside, right? Which was about 20%, right? 20 to 25%. So you're starting to get your squeeze. You're feeling good, right? You're up 20%. But if you're not, if you didn't take profit in this green candle right here when you were up 20%, you're getting stopped out, right? So I want to go over like the stop losses. So say you're entering here at 115. Your stop loss is going to be down here, right? Towards this, we'll call it 0.9, which is this structure right here. Because you had this swing low right here and you had the Bollinger Bands coming up. So this, you could use this as your stop loss somewhere in this area. Because if it broke down below this Bollinger Band here, this would be a squeeze to the downside, and you definitely don't want any part of that if you're buying call options. So you're in here at 115 with a stop down here at 90 cents, right? So your risk is $25 on per contract on the trade. So once you start seeing this squeeze go up here, and once you start making profit on these contracts, what you're going to do is start moving your stop loss up. So once we start squeezing up here, you're going to want to move your stop loss to below VWAP, right? Because right here, you're expecting continuation, right, to at least retest these highs. And if you didn't take profit here, I mean, you're getting stopped out. But since the squeeze did start triggering, you're going to want to follow the squeeze up with your stop loss. So you move your stop loss here from 0.9 up to about $1. I mean, you're taking $10 of risk per contract off the table right there just on moving that. So instead of $25 risk, if you got stopped out on this, you're losing $15, right? So you're already losing less than what you went into the trade comfortable to lose. But another lesson here I want to go into is like reading price action, right? So you see we start to squeeze up here. You're feeling good, you're up 30%. And then you see this massive red candle. This is a bearish engulfing candle. This is a reversal candle. So, I mean, the second you see this type of action, this type of price action, this candle, you're going to want to come over here and just click flatten immediately. Just exit the trade. And if you do that, you're getting out basically at break even or maybe a slight loss or maybe even slight profit. But it's pretty much just a no-reg trade, right? You see price action like that, you see a bearish engulfing candle, just exit the trade immediately because that's a reversal candle and that's not what you want to deal with. So that would have been a good way to manage the risk on this trade, moving your stop loss up and then just straight up flattening this. Right? So if you got stopped out, you're not losing as much as you were comfortable with. Or if you just flattened right when you got this type of price action, you know, you're breaking even and it's just a no event type trade. So yeah, I just wanted to go over that to show that not every squeeze is going to work out and how to actually manage the risk better during a trade that you're taking in case it doesn't go exactly the way you planned. And if you did take this trade today and you happen to sell up here up 20%, then congratulations, good job, like solid trade. But yeah, that's pretty much it for the trades. I mean, like I said, this kind of action in the S&P 500 is not good for, you know, day trading. So yeah, we're going to move on. Didn't really have any tweets I wanted to look at today. I just wanted to show the, you know, the summary of the budget proposal. So coming up tomorrow, it will be Friday, March 10th. We have non-farm payrolls and unemployment rate. So tomorrow will be another big day when it comes to economic data. So yeah, tomorrow should be very interesting, especially after the price action we got today. So that'll do it for the video. Appreciate y'all watching, and I will talk to y'all later.